Hello, everybody. So today I want to talk about something a little different, which is a trade opportunity. I rarely do trades, mostly because they don't come up very often. But I think in the case of Charles Schwab, to me, there is a possible trade play right here. And so what do I mean by a trade? Well, you may have heard this quote before, is whenever there's a panic or some sort of a very large negative event, what you'll see is that groups of stocks or certain stocks will take the elevator down. They will go down so fast. And then typically after a panic settles, and the news cycle is about 13 days in general. But beyond that, it takes a few months for a stock to recover, and stocks recover in a stairs back up kind of a pattern, right? So the idea that some stocks just fall so hard and so fast because of a panic, and then slowly the panic moves away and people buy the stock again, I guess is an old idea for people who trade. I do not trade. I do mostly long-term investing, mostly long-term investing. But I've done that in the past on a few companies, and only when I have somewhat of highest conviction, somewhat of an understanding that this is actually a trade, and because I believe these stocks, like a stock like Schwab over the long run, I don't see any benefit in owning it because I believe this is a stock that's getting disrupted left and right by fintech. But over the short run, right? I do think that stock will come back to the usual trading range that it's been trading, and I'm not the only one to think that. Actually, if you go through the news, Ron Barron again, he's kind of the only super investor I follow and talk about on this channel, and he went in on Schwab with millions. He went in on Schwab on Monday during the sell-off, and actually, if you watch my video on Monday, you could hear that I was very stunned by what's happening to Schwab, and I did the trade. So I took the trade. I bought Schwab yesterday, and I may add more Schwab today. And why? Why did I do that? Because I think Mr. Market is panicking in the case of Schwab. In fact, on Friday, I panicked a little bit myself, and I'll tell you why there was a panic going on and why that stock went down so much. But now that we've had a weekend to think over this, now that I've done enough, at least preliminary research, just enough to know that the stock's not falling apart in the next 3 months, I decided to step in. I think Schwab is a leader in its space right now. So as you know, I like to invest in challengers on this channel. I like to invest in disruptors, but this is a trade. This is different. So it's a leader in its space right now. Sure, it's getting disrupted, and I really believe in my fintechs over the long run, much more than I would believe in Schwab over the long run. But disruption takes years. I mean, sometimes disruption can take a full decade. And so the question when you do a trade is where will they be in 3 or 4 months? And Schwab will be the leader in 3 or 4 months still. By most metrics that I look at, Schwab is bigger than Goldman Sachs and bigger than Morgan Stanley. They're a absolutely leading ETF provider. And they have a yearly fee on other people's money, $7 trillion specifically. They've purchased a major military bank in the US, USAA. They purchased USAA. They've purchased another broker recently. They're kind of a consolidator company. They're a major consolidator. And the panic that happened is unrealized losses. And when I look back at this panic, after looking at the balance sheet, looking at the stock, I realized, $14 billion of unrealized losses, like big whoop. Like who cares? This is a major company. This is a highly systemic company that has its hands in everything. Like that's not a lot of money for this company. Absolutely not, right? And Schwab is not a bank. I mean, sure, they have a teeny tiny banking division, but they're not a bank. Most people who have money at Schwab, that money is earmarked for investing and investment, right? It's not like people are going to leave like that. They also have, when you peel back the layer and study Schwab, they also have a $50 billion line of credit from Federal Home Loan Bank in case anything were to happen. And there is more that makes these unrealized losses, not a bunch of a big deal anymore. And what is it? Well, the new funding program that the Fed and the Treasury have put in place enables companies like Schwab to pledge at par their bonds that have unrealized losses. So this program, this bailout program that is not a bailout, is going to be available to everybody, including Schwab, if there were to be a problem, which I don't think there is, because this is a very well capitalized stock. And another thing that I think is important to figure out is we see more and more of these mass panic movements, like these mass movements that are triggered by Twitter and by a lot of social media exchange of news. And when I look back and read what happened to Charles Schwab, is the panic was largely triggered on Twitter and Substack because there was a table that circulated and that didn't have that much context, but it did say that Charles Schwab had bigger losses than Silicon Valley Bank, and so next thing you know, stocks trade on the edge. And if you have a bank run, the problem is that you don't really have the time to do that in-depth analysis, right? Because you have an incentive to think fast, you have an incentive to get out first, and so that's what a lot of people did, I believe, and sold the stock. And I'm sure that panic was also triggered by algos and by Wall Street. There's not just Twitter, obviously. Like kind of a modern word of mouth on a table which was not accurate, or at least did not have the required depth of research that one would need to make a decision to punish a stock like Charles Schwab has been punished. And I myself got scared too when I saw all of this. If there is a bank run, you kind of have an incentive to move some cash. So I moved just a little bit of cash because I am a client of Schwab. I've been happy with them. It's not my main broker, but I have a little bit with them. And so I just did a tiny move, right, of funds. So it was very interesting, but this was all a panic. Like to me, this is very clear that this is a panic. No investment advice, of course. That's just my thought. And I put my money where my mouth is. Since to me it was a panic. I took the trade, and from the best of what I can tell, Schwab is fine. Now, I just want to point this out. Like, it's risky for me to make that statement. It's risky because I'm not an expert in bank stocks. I like to think I understand technology stocks pretty well because I spend a lot of time studying them. But in bank stock, I'm totally not an expert. So it's riskier for me to make that statement. But as you know, for me, it's all about risk-adjusted returns. Am I getting compensated for my own ignorance of the intricacies of investment banking? Am I getting compensated for that? And in the case of Schwab, I believe I clearly am, because I bought the stock close to the $50 mark, and so if I look at Schwab, right, if it goes from $50 to $80. And I believe it was a panic sell to the best of my ability. But what if I'm wrong, right? How am I getting compensated if I'm wrong? Well, I don't know. Maybe I have a 1 chance out of 10 to be wrong. Well, that would be okay because my return here, if I'm right, is close to 60%, right? If the stock goes back in the 80-ish price range, and let's assume it does this in about 3 months, which is kind of like when I look at patterns, it's what it usually do. The news, the panic, elevator down, and then takes the stairs back up. Assuming this is what happens, that's a 60% return in 3 months. So you're getting compensated for a ton of risk here. I mean, you can accept. I believe I can accept a riskier bet when this is what's for grabs, right? And of course, this is not a long-term hold. Like, I believe it would be a mistake to just buy the stock and having it as a long-term hold. To me, this is a short-term hold, and I was very blessed to take advantage of this panic yesterday and the indiscriminate selling of so many bank stocks. And out of everything that was sold off, I think Schwab is probably the highest quality that was sold off. And so I just want to say that even though it's fine, like some people may want Schwab as a long-term investment, and it's fine, but then you'd have to do your research and very deep research on the stock. That's not going to be long-term for me. I just want to say this is not the first time I do this. I've done it a few times, but one that comes to mind the most was March 2020. Past experiences kind of shape you as an investor, right? So in March 20, for Charles Schwab and the banks, we've had a whole weekend of insane panic. It was very stressful, actually, not enjoyable. Insane panic everywhere, all over media, everything. And all of the bank stocks and Schwab went way down. And March 2020, if you remember, that kind of was the same way. There was a lot of panic, and there were multiple things. But one of the panics was surrounding, our grandparents, right? Nursing home and nursing facility residents. That was some of the panic, and the headlines were very fearful, talking about, all of the horrible things that would happen to our, nursing home system, nursing home infrastructure. And so I was like, okay, let me look at a leading nursing home stock. And this was the pattern of a leading nursing home stock, like straight down. And look at it intraday here. That's crazy. So straight down. And I would argue the media did a really good job scaring us, right? And that's what they do. They're very good at it. That's how they get eyeballs. That's if it bleeds, it leads. And Ventas got hurt, and nursing home got hurt too, But was it exaggerated, right? Was the sell-off exaggerated? And I think it was. I think for a lot of these companies, it was. Because companies are agile, right? Companies act. And so when you look at what happened to Ventas, a leading nursing home stock, it went way down. But companies are agile. Companies act. Companies change. Companies put in place sanitary measures. And of course, it took the elevator all the way back up. Way down, elevator all the way back up. Right, that's a pattern that Mr. Market and the news gives us over and over again. And so, did any other stock follow this pattern in March 2020? By the way, this is a restaurant that I enjoy. So that's BJ's restaurant, right? So in the long run, awful stock to own, right? From 2011 to 2023, that's an awful stock to own in the long run. But in the short run, right? Same, March 2020, you had this narrative, all of the restaurants are going bankrupt. Stay away. Restaurants are going bankrupt. The stock takes the elevator down. And then the truth was slightly different. That's yes, the restaurants closing, that hurts. That hurts. But, firms are agile. And if firms... they did a bunch of things that were very agile in order to overcome the adversity, and it took the stairs back up because that's what companies do, right? Companies are not doing nothing about any sort of adversity. They're agile. They move fast. And they adapt to their situations. So, in other words, I'll conclude with this. Charles Schwab is the opportunity that I took. Small position to cover for my risk, but I do believe it will turn out to be a better opportunity for me, a good trade for me. And you may also wonder, are there any other banks that have been absolutely crushed in March 2023? And I would argue there's probably some out there, but I don't want to go into the granularity of figuring out which one. To me, Charles Schwab, because I know the company, because I've known them for 5 years, because I was a customer of the company. To me, that was the obvious trade of this pretty bad bank run that we've had recently. So this was not investment advice, of course. This is just entertainment. Thank you for watching. Appreciate your likes, your subscribes, and your comments. Comments too. I love your comments, responding to your comments. And have a wonderful day. Thank you.